Hey, good afternoon, everyone. David Ghai here with David Ghai Enterprises and Winning Options Trading. Just doing a quick recap on the market. So at the end of each week, we do a top-down analysis. That's where we look at all the indexes, the four major indexes. We look at the 11 S&P 500 sectors. We also look at volatility as measured by the Chicago Board of Option Exchange Volatility Index. And then we look at the Magnificent Seven. Those are the seven largest NASDAQ stocks, NASDAQ 100 stocks, non-financials. And, we look at silver, gold, the dollar, and a few of the commodities. And then from there, we are able to ascertain our posture on the market. Obviously, our posture right now is up. We know the market is going up. So once we've done our top-down analysis, then from there, we look at specific securities that we can invest in, whether that be stocks, using options on the stocks or using the stock outright. You can use technical analysis and apply it to any type of security and also to any time frame, and then make trades based on that. So that's what this is, a weekly top-down analysis. So first of all, we'll take a look at the indexes. We can see that if we're looking at, this is, again, the 1 year chart on a weekly candlestick. These are candlesticks that measures the high and the low of the week, also the open and the closing price. And so we see where we were on October 7th of last year. We closed at 58.1503. We can see we're up here closing this week at 67.15. And so obviously that's a 1 year uptrend, a very strong index, went higher this week again. Last week there was a little bit of a pause and a little bit of a lower close than the prior week, but this week it's back up. So this again is on the weekly. If we look at the dailies, we see some 2 days of red candles, which means that we closed lower on those 2 days than what we opened at. So I would expect a pullback at some point. It might happen this week, coming week. It might not. I mean, we don't know. We just have to watch the charts. But overall, it would be healthy to see a pullback. That would give us some good opportunities for a pullback when it does pull back. And if it makes a higher low than the previous low, then at that point, we've got some good opportunities to get back in on the upside. Right now, if you get in now, you're chasing. So I don't believe in chasing stocks or any type of security. I'll wait for a pullback and get in at a better time. So in any event, the S&P 500 is up, so that's the first major index. We also look at the NASDAQ index, same thing there. It broke out of this high that it set back originally in February. It broke out of that here in June, and it's continued to go higher. So, so that's up as well. The NASDAQ 100, these are the 100 largest NASDAQ stocks, non-financial stocks. It's on on somewhat of a pullback here since the high back in August, so a 2-month pullback. So this might be a place where it bounces from, but we'll see. If the market overall pulls back, then that's probably going to pull back as well or not perform very well. The Russell 2000, these are the small cap stocks. The high close back here in November of last year was 2,434.73. It actually broke out of there a couple of weeks ago, and then went higher this week. So it's a higher close, but again, if the market overall pulls back, that's likely to pull back. But that's a good sign, generally speaking. When small caps go up, that means there's good expectations for the domestic economy. Most of these companies are small capitalization stocks. That means that the value of all the outstanding shares is relatively low compared to mega caps like Apple, Google, and so on. So. And these companies, typically, if they're small capitalization companies, they're not well diversified in terms of product offering and or geographic distribution. So, but that's up, and it broke out of that high, so that's back on a nice 1 year uptrend. The Dow Jones, people look at this when they report on the market. The news always talks about what the Dow did. Honestly, the Dow doesn't really represent the overall market. That's only 30 stocks. And a lot of those are generals, meaning they've been around a long time. Their growth rates are not that great. They're mature companies, so they're not typically bringing out a lot of new products and services. So there are exceptions to that. There are some of the Magnificent Seven stocks that are in the Dow, but generally speaking, When I talk about what did the market do, I'm talking about the S&P 500. Those are the 500 largest stocks traded on the New York Stock Exchange. And then the last indicator we look at here would be VIX. That's a volatility index indicator. This is basically measuring the volatility of the S&P 500 index. So this is an indicator by the Chicago Board of Options Exchange. So relatively speaking, we have low volatility. When we have low volatility, the market's going up. When we have higher volatilities like here, that corresponds to a pullback in the market. So, but we have low volatility. When it does spike up, we're going to see that pullback in the market. So, a lot of people don't like volatility. It's actually a good opportunity. You can make significant money, more money when there's more volatility, actually. And so, that's where we're at on the indexes. 4 out of 4 major indexes are up on the year-over-year base or the one-year basis, so that's a positive. We look at the sectors. We have 11 S&P 500 sectors. We'll start here with, we'll sort these alphabetically. We'll start with XLB. Those are basic materials. We can see that if last year we closed in October of last year at 95.89, this week we closed at 89.44, so we're on a one-year downtrend. And so that's a downtrending sector. Communications, one-year uptrend. Energy, 1 year downtrend. XLF, 1 year uptrend. As financials go, the S&P 500 goes, and obviously as interest rates go down, financial stocks do better because the cost to borrow for consumers and businesses is lower the lower the interest rate. So those are financials. Recently broke out of these highs that it had from back in February, broke out of there, but now it's going sideways for the past 6 weeks or so. So it's consolidating its gains, meaning that there's some resistance here. But so far, everything that's being sold is being picked up by other investors. So the sellers are, the selling demand is being met by new buyers. If the market itself pulls back, then, I would expect that this will pull back some more as well. Okay, and then but that sector is up. XLI, these are industrial stocks. We can see that this is on a 1 year uptrend. We do see that we're going sideways since the high back in July. We've been going sideways for approximately 10 weeks now, 9 to 10 weeks. So that's what's happening on that. Technology stocks have been super strong. Just going up. We have a 5-week move up after making this high back in August. It pulled back for 2 weeks, gave us a bull flag setup. And so we would have had an entry above this candle right here, above 266.50. Would not have got filled the next week, or might have, depending on your filter. And then the next week, you would have definitely got filled on this week. And then you would have made some money on that over the last 4 weeks. So that's that. That's up. Staples, these are stocks that do well, or are always typically going to do well no matter what the economy is doing. These are, services that people need no matter what the economy is doing. So food, clothing, pharmaceuticals, etc. So in any event, that's on a 1 year downtrend as we see, and that's where we're at on that. Real estate, 1 year downtrend. The close over here on the left side is 43.43 a year ago. This week closed at 42.08, so a slight downtrend on the year-over-year basis, but looks pretty boring. It's not something really that looks too exciting to me in terms of trading it. Utilities, as interest rates go down, utilities do better. So we can see that, we broke out of this resistance from this high back in November, broke out of there in July, went higher, pulled back. Now it's gone higher again. So, we would have had a bull flag set up again above this candle right here, above the high of 84.64, would have been filled on that 4 or 5 weeks ago and been up to like 89.73 area. So, I don't trade utilities, but that shows you that sector is up. Okay, next up is healthcare. 1 year downtrend, but we can see that it's reversed on the shorter term time frame, and we have a 3-month uptrend. So that's something we would, if we were going to make trades on XLV, that's an ETF for the healthcare sector. An ETF stands for Exchange Traded Fund. That's a closed-end mutual fund. It trades just like a stock, so you can buy it and sell it like a stock. It's not a regular mutual fund where it's an open-end type investment. So where you can buy and sell and redeem your shares at any time. This is, that's used for longer term investing. The ETF can be long term, but it trades just like a stock. So in any event, that's on an uptrend now on the 3-month basis. Could be some opportunities there. But really what this tells me is if the healthcare sector is on a 3-month uptrend, then what I can do then is go into the industry groups within the healthcare sector and find the best stocks and then look for setups there. Next up is discretionary. We can see that we're on a 1-year uptrend. If we look at the far left here to where we're at today, we can see that there was a high made back in December of last year. It broke out of that in early September, went up for 2 weeks, pulled back, and technically it's a bull flag setup. So there's a setup to the upside. But again, if the overall market pulls back and we're due for it, then that's going to pull back. So there are exceptions to every rule, but generally speaking, 70% of stocks are going to pull back if the market pulls back, at least 70%. So I like to trade when everything's working on all cylinders. So in any event, if you look at the sectors, remember we had 4 indexes out of 4 that are up. On the sectors, we have 6 up and we have 5 down on the 1-year basis. So what that tells me is we have to be very selective. If we are looking at buying options on stocks, then we want to look at those up sectors and find the strongest stocks within those sectors and industry groups. All right, and then next up we'll look at some commodities. So oil, not too exciting right now. It's on a 1-year downtrend. If it breaks out of these highs up in the 71 area, then yeah, I'll start looking at that. But right now, I don't see anything here that's too exciting. Gold is where it's at, gold and silver, and we can see that we broke out of this high that we had back in June, 4 weeks ago. And I think when I recorded in weekly wrap then, I said there was a setup there, but in any event, it's gone up. So that's a money maker. That tells me that central banks are buying gold. They're putting money into gold. It's a hedge against inflation. It's a hard asset. You can trade the ETF using the GLD, but that's not a physical hard asset. So, it's always good, probably to have some physical gold and silver and, protect yourself that way. So in any event, that's gold. That's what gold is doing. So really what I'm, looking for is a pullback on that. I wouldn't be getting in now. It's just chasing it. Not to say it can't go straight up. It can, but it's not the way I trade. Natural gas, we're at some lows here. I don't have a trading plan for support lows, but technically it's at a low and it could bounce from here. But what I would look for on this is a reversal. So I'd look for a higher high. I would look on the 3-month time frame for a setup there and then go from there. Silver, very exciting as well. We highlighted this a couple weeks back, 6-8 weeks ago, and we can see that, if you'd place an order here on this to get above this candle of $39, you would have already hit 48.32. So, it made a close to 25% move in 6 weeks. So what I'm looking for is a pullback on this. The all-time high in silver is 50. We're at 48, closed at 47.96, just under 48. So I'd love to see a pullback to this 50-day moving average. That's a red line there, somewhere in the 42 area or 45 area. Even if it pulls back to 45 and, you have a move to 50 back to the all-time high, that's a $5 move. That's more than 10%. If you're using options, the multiplier on that is 10. So it could be 8, could be 12, but generally speaking, just for the sake of this discussion, we'll say 10. So, on options, you can make, if it's a 10% move, you can make 100% on your money within whatever time frame it takes to get to that target. So, again, we don't offer investment advice. We're not financial consultants. We're not broker dealers. I've had those licenses, and quite frankly, having the licenses gave me the ability to sell a product. I could have, I sold stock, I sold options, annuities, mutual funds, all that. But the bottom line is it didn't really help my clients. I wasn't able to help them protect their portfolios before major market corrections because we weren't taught that. We were given a license to sell a product. So, as we move forward, we're going to be working with some people I believe to put together some products that can help people hedge their portfolios prior to major market corrections. We're told by Wall Street to leave our money in. Don't worry about it as long as you're using dollar cost averaging. It's a good way to enter in, but if you're using diversification and asset allocation, you don't have to worry about the market correcting as long as your time frame is 10 years, because the market will come back and you'll come back to break even. That's true, but it's not very intelligent. I mean, really, if you have $1 million in the market, do you really want to see it drop to 500,000, when the market corrects 50%? That's not, I don't call that smart money management. I think it would make a lot more sense to get out at 800,000. And when it does get back to where most people are going to be break even, if they stuck it out, where they get to $1 million, you'll be at 1.6 million. So to me, it's a no-brainer. So in any event, those are some of the commodities we look at. And then we do look at the Magnificent Seven. Those are 7 largest NASDAQ 100 stocks. So we can see that Apple just broke out. The high here back in December was a close at 255.59. This week we closed at 258. So that's a breakout. So the long-term target on this, if the market keeps going up, the long-term target on this is going to be, you would take the high of this right here at 260 area down to the low here on this pullback of 170. That's about a 90-point move, and we would add the 90 points to the high here of 260, and you'd be looking at a 350 price target on Apple, and the time frame on that would be, it could be a year. This was December up until this September, so that's, October, I should say. So that's about a 10-month time frame. So in 10, 12 months, you could be at 350 on Apple if the market keeps doing what it's doing. So again, this is not a recommendation to buy or sell. You should consult your financial advisor if you have one. And when I put on trades, I'm not putting on a 10-month trade. I'm putting on a 2 to 20 day trade. I'm a swing trader. So, but again, as you learn technical analysis, money management, risk management, then you have to figure out what works for you, and then just have a trading plan in place. Make sure you follow that trading plan every step of the way. So that means when you put an order in, make it a conditional order. So if you're going to get in on something, you want to make sure it's going up before you get in. So if it goes up and confirms the setup, what it looks like on the chart, and starts going up again, then you get in. If it goes south, you get out with a small loss. And then as you do move up, you move up your break even so that you can, and have profit management techniques so you can take your profit as you go. A lot of people make money, but then they give it all back, and that doesn't make any sense. So there's always an opportunity to get back into something. So when you get out, if you made a lot of money on it and it keeps going up a little bit, I don't care about that. My mentor always said, that's somebody else's money. I got my money. And when it pulls back, I'll look for the next entry and get back in, so that's a smarter approach. So I always tell people success leaves clues. The people I work with in the money business, Tom Sosnoff, Tony Batista, all the people at Tasty Trade and Tasty Live, they're true experts. They've been doing this a long time. Their background is they started in the pits trading of the S&P 500. We all saw the movie Trading Places where they're shouting out orders. Well, that's what Tom Sosnoff and all of his friends who founded Thinkorswim and sold that off back in 2009. And then this new company, they started in 2012 and were acquired last year, I believe, for a large sum. They know what they're doing. The platform is an excellent platform. In fact, they have a couple events coming up here in Austin, Texas, one in Charlotte. If you want to see exactly how you can put on a portfolio of, let's say, 40 positions in 75 minutes to 90 minutes, and have a portfolio all set up with a neutral type strategy. That means you're not taking a lot of downside risk or upside. You're managing the positions, according to a neutral market posture, and then you make adjustments to keep it neutral. If you want to learn those strategies, Tom Sosnoff and company are experts at that. The platform is designed so that you can trade any type of security with the same interface. So that's what set this firm apart. Two things. Number one is the technology. And then number two, the free education. They have 8 hours of live programming every day on YouTube. So you can listen to a lot of different people that have success and been doing it a long time and learn from them. They have courses that you can sign up for free on the website, Tasty Live, and then they have the events. So, I just tell people success leaves clues. So, in any event, I hope this helps. If you're watching this, I would say two things. Number one, if you like the content, subscribe to the channel, share the channel. And then the other thing would be reach out to me at 702-550-8619. Just send me a text. Let me know if you have an interest in learning more about the service we're going to roll out. And then based on that, based on the interest that I get, I'll reach out to you and we can talk and set up a time to meet and, share what it is we're doing. And then, we're going to offer world-class education and, opportunities to make money in the markets. And, based on the feedback I get, we'll determine when the launch date is and exactly the structure. So it's all going to be based on what people want is the bottom line. So in any event, there's a lot of services out there. I paid $25,000 plus for my investor education. This isn't going to cost that much. Obviously, it's not going to be free, but not even close to that. And there's a lot of services out there. I've been looking at them and seeing what they offer and what they charge, and there's going to be second to none. So we have good people that that we continue to learn from and improve on. And like I said, success leaves clues. So what we do, just so you understand, is we look at on a technical basis. We're listening to what the charts tell us, not what people tell us, not what the news tells us. The charts tell us everything. Technical analysis is based on three tenets. Number one, prices move in trends. So the trend is our friend, right? Secondly, price action discounts everything. So anything on the news has already been factored into the price. So we don't listen to the news. We don't need to worry about that. And then history tends to repeat itself. So I use technical analysis, Tasty Trade. They use high probability strategies. They're not really looking at the technicals. And so both work. I like both. I'm doing both. But, we're going to offer this service very quickly. But it's going to be based on people that have an interest. We're going to find out what it is you're looking for and see how we can accommodate that and then put together the perfect program based on what most people want. So in any event, reach out to me again, 702-550-8619. If you like the content, like it, share it, subscribe to the channel, and look forward to talking to you all soon. God bless.